Hey everybody, Eric Sandstrom, Prime Lending, the guideline guru here to talk to you about CalHFA loans, down payment assistance, okay? We're going to be talking about a few different things within this video here today. We're going to be talking about homebuyer education that's required in order for the program. We're going to be talking about the income limits, and then we're going to be talking about a few of the programs that you can combine together with CalHFA. All right, so let's start out with some of the easy things. Let's start out with the homebuyer education. All borrowers are required to complete homebuyer education. It can be done online, over the phone, or I believe over the telephone. They usually state that it's going to take about 8 hours, but I have had clients that have completed it in a much shorter time period. I believe they said in a couple hours. So that's great. Obviously, what it's going to do is it's going to teach you about the program, the risks, the rewards, and the benefits. Okay, so obviously it's important to do that. Now that we've talked about the homebuyer education, let's talk about the income limits. This is really key and important. So this has changed dramatically from what it was in the past. In the past, it used to be kind of like a sliding scale depending upon the number of people that lived in the house. So if you had 4 people in the house, that income limit is going to be much higher than if you had just 2 people or 1 person living in the house. So that has been completely taken away with the way that CalHFA does loans now. And the income limit for California entirely is $157,000. So as long as you make less than $157,000 a year in your household, you may qualify for this program. Okay. All right. So now that we've talked about education, we've talked about income limits, let's talk about the couple different programs that CalHFA offers to provide incentives. Okay. One of those is called MyHome. MyHome is a subordinate lien. So it takes second position to the first, and it's based upon today a 2.5% interest rate. So it's very, very little. In addition to that, it provides a 3.5% assistance of the purchase price or appraised value, whichever is less. So if you're buying a house for, let's just say, I mean, easy math, 100 grand, you're getting $3,500 in incentive towards closing. So that's massive, especially on a $100,000 purchase, which I don't expect you to find that in California. But again, just basically take the purchase price, multiply that by 3.5%, and that's the assistance that you're going to get. Okay, CalHFA has a couple different programs. They've got one for FHA, they've got one for conventional. So depending upon your profile and your credit score, will determine which program is going to be best, and we're not going to be chatting about that today. Okay, so we've talked about MyHome. MyHome, you're able to do just as a simple, that's it. You can take advantage of the CalHFA interest rate, whether it's FHA or conventional, without using the ZIP program. ZIP is another thing that we're going to be chatting about, provides additional incentive. However, the interest rates will vary depending upon which ZIP you do choose, or if you do not choose one at all. So again, going back to how much you have to close the new home loan will determine which program's going to benefit you the most. And of course, speak to a professional. Call me. I'd be happy to answer those questions for you. Okay, let's get into ZIP. ZIP is basically it's combined in the first lien. So there's no other mortgage, there's no second lien. ZIP is just incentive. You can either take a 3% incentive, and that's based upon the loan amount. Okay, so it's not the purchase price, it's the loan amount. Or you can take a 4% ZIP. So there's 3% and 4%. And the interest rates do vary. They are published on CalHFA's website. So usually, no matter where you go for this program, it's not going to differentiate from another lender. You're going to experience typically the same costs, same rates as they're published by CalHFA. Okay, so I've seen a lot of people get into houses with less than 1% down. I've had situations where borrowers have received a credit to actually reduce the principal balance at closing, which is rare. And then I've also had people that need to come in with 2 or 3% because they did not choose to pick, let's say, one of the ZIP programs, or they didn't want to use one of the programs to combine it and take the lowest interest rate. So that is the gist of CalHFA. Very great program if you qualify for it. I would recommend highly taking advantage of it, and please make sure to call me. Another big thing about CalHFA is go through underwriting. I can't express how important this is. Go through underwriting before you go home shopping. Otherwise, it's going to be a nightmare. Okay, so call me 30 days before you're looking to buy a house. Let's go through underwriting. At that point, we can go through a quick close, 21-day close of escrow, or possibly even less. Okay. Again, this is Eric Sandstrom, Prime Lending, the Guideline Guru, and we'll chat again. Talk soon.